Hello, season's greetings, and welcome to this month's video blog. My name is Roy Coleshill of MonsterMortgage.ca, and today we're going to talk about the thing that nobody likes to talk about is, holiday debt and refinancing. One thing I want to talk about, people always ask me, is when should I refinance? The key thing about this is refinance before you're way over your head and get yourself in trouble. And the way you can actually avoid that is every year or every 6 months, have yourself a financial checkup. Call somebody here to help you out with that. Also, you want to be able to create more financial security for you in the future. And that's another reason why you want to do refinance. And also, you want to make sure you be able to save some money in interest payments and also increase your cash flow on a monthly basis. The thing about refinancing, people always ask me, but what about the penalty? Does it make sense to pay the penalty? The question is, it doesn't always make sense to pay the penalty, but in some forms it is, even though you're not going to save the penalty over the term of your mortgage, as long as it's going to increase your cash flow and give you a better life to live during that time. And a good example is that a client come to me the other day, and I actually wrote down the whiteboard here for you. His home value is $380,000 and had a monthly net income of $4,173 after tax. The problem he ran into is he lived most of his life on consumer debt. His mortgage was $238,000 at $575 with a monthly payment of $1,431, and his combined consumer debt was approximately $50,000 at 19.99% with a minimum monthly payment of $1,750. So at the end of the month, it gave him about $956 to live, which included taking his kids to hockey, taxes, and things like that, and that's why he got himself a little bit in trouble with consumer debt. In this case here, his penalty was quite large. It was over $12,000. But we knew that we couldn't save him the penalty over the term, but it really improved his cash flow position to give him better, secured financially on a monthly basis. So if we took the $238,000 plus the $50,000 consumer debt and his penalty of $12,614, gave him a new mortgage of $300,614 at today's 5-year fixed rate at 3.69, amortized over 35 years, gave him a monthly payment of $1,270.78. And you minus that from his net income, it gave him a positive cash flow of $2,903.22, which allowed him to save some money for RSPs and retirement, be able to do things with his kids, and even take a vacation. So in this case here, it does make sense to pay your penalty. So the key thing now is to figure out how we can improve your cash flow, and it makes sense for you to refinance your mortgage today. Thanks for listening. This is Roy Coleshill of MonsterMortgage.ca, and have yourself a season's greetings and a Merry Christmas and a Happy New Year.